Hello, everybody. This is Mel the Money Coach. Thank you so much for tuning in to another episode on my channel called Mel the Money Coach. So we are talking about all things related to finances, budgeting, saving, and everyone's favorite topic, or almost, investing. Because it is so much more fun to invest than it is to pay off debt. Wah wah. But I don't know about you, I had a blast saving for our emergency fund because that's amazing too. But we are talking about investing. So today I wanted to talk briefly about, and I'm not going to mention any specific companies, but the investment strategy that the Ramsey baby steps suggest, or Dave Ramsey suggests, is to utilize growth stock mutual funds. Now, this is a fancy term for saying we are distributing the risk among many companies, not just one. So the hard part when you rely on single stocks, which means one company, either that's an employer-sponsored investment, like you work for a company and you invest in that company, or it's a company that you invest money in, just you don't work for them, but you're throwing money into a specific company, you're going to see this ebb and flow and the steep up and down of that company. Now, if that company goes under, you lose your money. Versus if you have growth stock mutual funds and the risk is spread out among, several, hundreds. If one company in that several hundred goes down, your investments aren't affected much. So that's why it's so much more of a secure investment. And you can look at that long track record over the, say, 10, 20, 30 years. You can choose those investment funds that have performed really well, like 10, 12, 15%, versus a single stock, which may have gone up 40% in a month, but then it'll go down 50%. You know what I mean? So it's, not riding that roller coaster as steep as a single stock. Now, another thing that isn't a great idea, life insurance, like whole life or cash value insurance, not a good idea. Certificates of deposit or CDs, annuities, or any of these fancy terms, you really want to pay attention to your rates of return. So if you are marketed a product for investment, make sure you look at the rate of return. And, when you're looking at the system, what you really want to do is keep your savings separate, your life insurance separate, your investments separate. Now, these things all, they all work together as part of the plan, but you don't want your life insurance pretending like it's an investment because it's not. So that usually means that it's performing poorly and somewhere, some way, somebody is taking a cut off the top. So, you just got to be really careful when you start to look at investments, that you're getting the appropriate advice from a qualified professional, a SmartVestor Pro, that they're able to help you, with the heart of a teacher and be transparent about the fees and all that sort of thing, so that you're getting the most for your money. Because the key with everything with investing is to maximize your rate of return over time, not to make 40% and then drop 50% and then make 40% and, that kind of thing. So even tweaking 2% can make the difference of hundreds of thousands of dollars over 30 years or 20 years or 10 years. I mean, so even those tiny little differences and those little shifts and changes can really direct you on the right path to success. So it is so important that you understand what you have, how it's performing, how it's managed, what the fees are, and how you can best maximize your retirement. Because remember, retirement is the income for the rest of your life after you retire. So even though, say, $1 million sounds like a lot, to live with that income, the income that generates for the next 40 years, so just think about that. That income that you're putting in your nest egg is the income for the rest of your life. So That is super important. This is so important. So this is, really pay close attention. And this is what I help my clients with too, is to go through things, try to figure out what we need to do, where we need to go with it, what they need help with. And then I connect with them with the right professional if it's something that's beyond my scope. So that's all I have for you today. And I'll see you next time.